So many retail traders call themselves, I'm a market maker, I'm a god of the market, but they don't know what it means to be a market maker. So a market maker is a financial institution, a broker, or a bank that is willing to offer or to guide so many traders in the market. So basically the role of market makers is there to provide liquidity, to match buyers and sellers, at the same time to keep trading moving or to keep trading flowing. So let me give you an example of a market maker. If you happen to go in a big market in Kampala, you find that you shall find there are people who are willing to buy maybe tomatoes and those are also willing to sell tomatoes. Then there's this specific one person whom they call investor, who's willing to buy at the same time also willing to sell. For example, you happen to find that there is more buyers who are willing to buy tomatoes, but there are few sellers. So what will he do, that specific trader or investor? He will decide to say, let me sell you the tomatoes, because he wants to balance, because the demand is so high, people are willing to buy the tomatoes and those ones who are willing to sell are very few. So for him, he will be able to sell more to fill in the gap. Or maybe you happen to find that there are so many sellers, but there are less buyers in the market. So for him to say, okay, let me come and buy those tomatoes, because his role is to balance both sides, the buyers and sellers. So let's look at the examples of the market makers. We have, for example, like JP Chase Morgan, Goldman Sachs. So keep in mind, if you ever see a pair with so many big spreads or huge spreads, it's a sign that market makers are not there. That's why without market makers, you always find the market moving so slow. But since market makers are always there, you see the pairs are more active. Look at the pairs like gold, US oil, US 30, they have more market makers there. That's why you find them, they are more active. So that's how important market makers are. So the biggest question, you find out that most traders think market makers manipulate them. It's not true. They're not there to manipulate you. They don't have your time. But our role as traders, we need to see how we can be able to enter. So especially, where do market makers tend to reverse from? They tend to use old highs, resistance levels. That's why they always be seeking for liquidity, because they know that's why you place most of the buys and sell stops. So next time, we shall look at how market makers manipulate in the next coming video. Stay tuned. Follow us on our channel. Leave there a like to learn more of advanced concepts, or find us at North Park Plaza opposite UNBS, or find us on our social media, X-Men Forex Academy on YouTube, on TikTok, and also on Instagram. Thank you.